So quick hits, three things that we've seen in the news recently that I want to comment on that some of you may have seen in the news. First one, Trump's China trade deal. Tariff pause means new surge in freight shipments and higher prices. We touched on that earlier in the show. Lower food prices tame U.S. consumer inflation in April. Tariff squeeze awaited. So as I just said, a lot of people looking for or waiting for that tariff squeeze, but we saw lower food prices. Some are pinning the lower inflation numbers, the headline number, the core number on lower food prices. And that's why we're seeing a drop in inflation in the U.S. And our third point, U.S. car prices higher in April after tariffs hit. We're now starting to see the first cars coming to the U.S. from other countries. And as we know, 25% tariffs being put on cars, on some of the parts that went into the car. So we're starting to see the automobile sector in the U.S. be hit. We're seeing layoffs in GM and Ford, even Honda. Honda's talked most recently about not moving forward with their plants here in Southern Ontario to open up their EV plants and battery plants, etc. So that is obviously a negative for the market. So let's talk about our first one, trade deal between the U.S. and China. What does that mean? Well, it means a surge in freight, right? A lot of the freight companies were going to get hit. We're starting to get hit. They were starting to see, not as much deal making, not as much movement of goods across the ocean, and obviously that was hitting. But it was hitting these companies. But now with a trade deal, or at least talks of a trade deal coming, one trade deal discussion, UK a lot further ahead. Trade deal with China, trade deal with many countries that we're hearing all over the world, whether it's South Korea, whether it's Japan, our U.S. biggest allies. Those trade deals may be announced in the not so distant future. And now, once again, hopefully for the U.S., we're going to start to see some of these freights, these ships coming into the ports in places like California full and as many ships as they're used to seeing. The second, quick hit we wanted to talk about is the lower food prices tame U.S. consumer inflation for the month of April. We have a chart here, annual price changes for U.S. consumers, and you can see housing was up 4%, other goods, medical care. Then you see the food and beverage, 2.7%, definitely not as high. All items in general, 2.3%. And you can see at the bottom, apparel was negative, transportation was negative. I think apparel is negative has definitely to do with the trade war with China and the tariffs that have been placed on places like Vietnam, where we get a lot of apparel from. I know Nike would be the first to tell you that. And so we're probably not getting as much in the way of goods from those countries. And that has caused inflation to go down in that area. So overall, I think definitely food and other areas have helped bring down inflation. And hopefully this could lead to perhaps the Fed being more accommodating in their interest rate policy somewhere down the road. Our third point that we wanted to talk about, a quick hit, and this has to do with U.S. car prices moving higher in April as the trade or as the tariffs have hit. Our first chart and only chart of this segment we have here, you can see there it is. And you can see new car prices did jump after tariffs were in place. And it's an interesting chart because it talks about that yellowish line, the gold line, is incentive percentage. So the incentives you can see on the far right-hand side for these automobile incentives for people to buy cars, those are them going down. And I think the reason for that is their margins have been getting more and more narrow. Margins on cars, definitely, if prices are going up, it's going to affect margins, and therefore the incentives have not been as great. And that, of course, leads to prices of cars moving higher. So interesting what we're seeing. Obviously, the increase in prices are affecting the big three, whether it's Stellantis, Ford, GM, but it's affecting actually everybody, right? Anybody who's bringing a car, manufactures that car outside of the U.S., brings it into the U.S., you're going to be hit with some 25% tariff. We'll see, what happens going forward, what the negotiations will look like with certain countries. And hopefully these tariffs can come down and make business a lot easier, between countries, the U.S. and all the countries all over the world.